So we've got about 20 minutes for the panel, so I want to just pick up on a couple themes that the speakers have already mentioned, and then we'll take some questions. But I wanted to start with Will and Niall to talk about, you touched on, Niall, the experience that you've had in fundraising in the UK and in this town.
Yeah.
And I'd love to talk a bit more about that. And as part of that, could you talk about how you two met and how things evolved in terms of the investor funding relationships?
Okay. It's an interesting story, actually. We got a lead investor, so we went around a number of different places, got a lead investor, who shall remain nameless, who we then got some private investors to support the term sheet. I went away on holiday, got a message from them through halfway through the holiday to say they wanted to change some of the terms that we'd already agreed. So I came back and talked to my board and I said, I can't have an investor like that round the board table. So it was a very uncomfortable moment because we had to say goodbye to them. And I had no lead investor. I had some other people who were willing to invest and I had no lead investor. Somebody introduced us to Oxford Capital. They did their due diligence very quickly and we passed the test, and it was a bit like a jigsaw. They dropped their part of the jigsaw into the middle of it, and so it was. So what do I take away from that? I mean, raising capital is difficult, but it's incredibly important to have the right culture of investor because they're going to be around your board, and you're going to go through some tough times, and I hope we haven't had too many tough times yet. But the chemistry is really important. So it's the raising capital, as I say, the UK is very good for private capital, and a lot of your investors get EIS relief. So we're blessed in this country by having that. But obviously, I don't have the hours in the day to go around and see lots of individual private investors. So by using Oxford Capital, or by using some of the angel groups, or latterly now doing crowdfunding as a way of reaching those. So I think, and then later on you'll use VCs and firms like that to family offices to raise the next round of capital. But I guess as I found, it probably took up 2/3 of our time in the first year. So somehow you have to find a lot of extra time to do your day job as well. So it is a challenge, but it's fun as well.
Yeah, so go ahead, Will. What was it like for you guys stepping in?
Look, it was kind of easy for us because we had no back. We kind of came in, met the Wrisk guys, did our DD, liked it, and said, well, here's the deal, let's do it. So it was kind of much easier for us because we didn't have that kind of previous background. But I think the point there is an important one that, this may be a made-up stat, but it's a good one nonetheless, that the average VC investment lasts longer than the average marriage. It's good, and you probably spend just as much time kind of at late nights or on the weekends kind of dropping phone calls and emails and stuff like that. It's an important relationship between the founders and your major investors, and the sad truth of the matter is that you don't get on with your major investors as a startup founder. Well, they can make life really difficult for you. They can block things that you're doing, they can put out and say, well, that's a difficult founder to work with and you don't want that going around the market. So it's important. It's not just about finding money or taking the first offer that comes to you. It's about finding the right people who, most importantly, you can get on with. Then secondly, hopefully, they actually add some value beyond just pure cash into the company. So it's tough, and it's tough on both sides because we want to back founders that we get on with as well. We can have a productive relationship with that will not necessarily do what we say, but will at least listen to us and consider when we say something and take it on board. We want to have that kind of constructive relationship with people.
Great. So just picking up on some of the themes here, just a quick question for you. So Wrisk was going through a hybrid fundraising round where you did some crowdfunding and you had some institutional funding coming. So that there are branding elements to that. Just wanted to hear the views on kind of the rationale behind that, and then maybe we can invite Kaitlin and Ian to discuss. The next part of the conversation will be around expansion beyond the UK? So you have experience of helping companies expand to other markets, and what are you seeing in that space? Kind of picking up on the themes here. But just curious about that. Relevant conversation.
Well, I think that's quickly from a VC point of view. So what were we concerned about? We were concerned about the efforts the fund around. Would it give Wrisk sufficient runway, and the structure they wanted to do give it sufficient runway? Would it end up with them having a good syndicate of helpful investors around the table as it did? And actually, you've got to think about value add for investors in different ways. The value add that we're adding as a VC is probably more about network and relationships and kind of the strategic discussions around the company. The value add that the crowdfunding platform Seeders adds is more about kind of brand building and PR and communities of early adopters. So you can get different types of value add. So we were kind of, we're happy to be flexible on what the right constituents around is, as long as it's achieving the right outputs, so giving the company the right runway and the right syndicate to hopefully give it the best chance possible of succeeding.
Great, that's a perfect segue. Unless Niall wants
No,
to comment.
you correct.
So, and how about we talk about international investment as well, in terms of the appetite for that and kind of what Kaitlin and Ian are seeing in that space, but also maybe come back to you afterwards around, you know, how much you like to play with international investors or you want to do in the UK. But for now, let's talk about the international scene.
So I would talk a little bit more about China and what kind of investments are going on there at the moment. We're seeing a huge amount of VC people who are investing in Chinese startups to begin with, and they are moving on to creating new funds and investing in Europe and in the US at the moment. So people want to diversify their portfolios, they want to put their monies outside of China, so they are interested in seeing what kind of interesting things are happening in the fintech space in the UK. In terms of how to get in touch with these investors and when is it time for business to be moving to China, I would say, look at the UK market, do what you can in Europe at the moment to get these low-hanging fruits. Make sure you establish your brand here before thinking about going into a completely different market. It's a huge risk and it's a huge investment as well, so I wouldn't recommend doing that lightly. I think you need to partner with the right people in terms of legal, in terms of branding, in terms of marketing, all these different aspects. Make sure you have the right partners to be partnering up with when you're entering into a new market. So, yeah.
Karl, I have a confession to make. I used to live in the Middle East for 20 years, and for 10 years I was a lead singer in a band. So I can't really hear very much, and I have no idea what the question was. So
okay, that's all right. So we're just moving into the international side of the discussion, and I know the European Blockchain Association has helped a number of companies either secure funding or expand. So could you maybe tell a story around that? One of the companies that you work with and what the rationale was for that?
Okay. So in the European blockchain, we look for companies that may be of interest to our Chinese investment community, and one of the frustrations is only about 1 in 20 is. I know that's an awful lot of work, but when it does come along, it's very nice, but also very frustrating. The one we've just helped is a French company called Neurochain, and we raised $300,000 from our Chinese investment community for them. It took an awful lot of work and an awful lot of Zoom calls and an awful lot of cajoling from my Chinese partners to get them to do it. They were only interested in infrastructure at the time. They were ground floor investors in things like EOS and Neo and Zilliqa, and all their buddies in Silicon Valley would give them all the good ones. So to try and find something of interest from Europe was really hard. But we did find this French company called Neurochain, who are using machine learning and artificial intelligence to increase the speed on the Ethereum blockchain, and they were very interested in that. So that's the experience I have. But our Chinese investors are very picky, very selective for a couple of reasons. One is they do get lots of early stage offers from their buddies in Silicon Valley, and we are their placement people here in London. And the other thing is they were only investing in a certain sector at the time. This was infrastructure. Hopefully they'll move on to the apps because we have plenty of those, and just to shout out, we do have plenty of things come across our desk which these guys aren't interested in, but seem like good deals to me. So let me give you a card later on, and maybe you can throw some money at those. Thank you.
Great. So that gives us a bit of a view. Kaitlin, would you want to add anything to that? Or I was going to come back to Will and Niall to ask about at what point might you consider international investment, and or what's the Oxford Capital view on working with international investors? Given that 60% quick stat, 60% of fintech deals in the UK last year had foreign investment.
Does anyone have any other questions?
Yeah, we could invite a question from the audience as well.
Thank you all for your talks, it was really, really good. One thing which is massive in fintech, which we haven't necessarily brought up at all, is the FCA regulation and all that kind of stuff that has to go through. So I want to ask a question about how you guys see investment pre-authorization. Because something I hear a lot is show me traction, show me the product working, but you kind of can't even market to people unless you're authorized. It seems like a chicken and egg situation. What are you guys' advice on that?
Shall I take that? Yeah. Okay. So we are doing our trial in the FCA sandbox, and the FCA I think are world leaders in running these things called sandboxes, so that we can experiment. So we're experimenting with things that aren't normally done in insurance. So a perpetual policy, that you show your rating score, how you pay for it on Apple Pay. These are things that haven't been done before. So so they let us do that with 500 customers. So that enables us to have sort of traction proof points to be able to show to investors. So now you have to apply to join the FCA sandbox. So they've got to check that you're legitimate and a worthwhile experiment. But they've been incredibly supportive. So it is possible. So I know it sounds like chicken and egg. I mean, lots of these things are chicken and egg, I'm afraid. But there are ways, there are mechanisms to allow you to do that.
I was thinking more about part 4, where you have to find investors to back all the experiment.
Yeah, well, I guess, I mean, all I'd say, is you've probably got to do sort of friends and family first. I mean, we had no product, we had a prototype. We just showed them what the screens looked like. And that enabled us to, with the sort of team and, the sort of, some other people endorsing it. And one of the things we used early on was to create an advisory board. So I would recommend that to anybody as a means of, you don't have to pay them, you might have to give them a couple of shares or something, but it enables people who have no legal responsibility for the company to add their name to it. And that, I think, helps build your sort of, your depth. So there are ways you can, of sort of, without actually having traction, of showing greater depth.
More questions? Anyone else?
Can I ask a question? This is actually directed, I guess, for Niall, which is, I'm quite interested in the next round of funding and how you're suggesting you might go to a crowdfunding source for that.
Yeah.
The question is, why would you not go the traditional, at this stage, equity release, full IPO, go for it, get some investors?
Okay, perfect question. Not planted. The reason we did that slavishly is following Revolut and Monzo in terms of building their community. For us to build a brand out there will take a long time. I don't want to throw money at Facebook or at TV ads with cuddly toys. Building a group of people who are believers in it, they've read the business plan, the pitch deck, they've then put some money in it, is a win-win. So I'm a huge fan of it. I think American investors are a little bit confused by it. They think it's like Kickstarter, where you get a free cinema ticket or something like that. And some UK VCs are skeptical. They think it's going to blow over, and they're eating their lunch, in a sense, because that's attracting a lot of investment. But it's been very successful for us. It's only a part of it. So, it is, the next round, that your question will be, Series A. So when we've got some traction, proof points, and the question, we've got a meeting booked in the diary for in a few weeks' time, is where would we do that? Would we go to UK VCs? Would we go to some American VCs? Or continental European VCs? Would we go to family offices? These are all up for grabs. But, I think and the culture of those, what they can bring, is going to be incredibly important. But that's a reasonably well-worn path, and we'll work with these guys to find who's the right person for us.
completely agree. I mean, it's about kind of finding the right investors at the right stage, and as I said earlier, the attraction of crowdfunding is the crowd, and that's something that no institutional investor can bring you because they're a single person, and it gives a great way to activate your community and make them feel more involved, and it kind of plays back to actually the question earlier about how do you get early adopters in the regulated area, kind of people who feel that pain point might be willing to step up, put some money in, but also to be early beta testers for the app and stuff, and that's what Wrisk has seen, which has worked really well.
Right. I'm ashamed to tell you that our funding is we've raised 975,000 now, we've got $1 million. We just announced today we're going to close it off. You can put £10 into Wrisk if you want. There you go.
More questions?
I'll go another one then, if nobody else is joining, which is a question for Karl.
Okay.
And some of you as well, because this funding, the ladder that you built up here, seed funding, is very, very formulaic, and you're constraining businesses to follow a path, and all businesses are different. Some businesses might need funding, and then they can be self-funding for a while because the idea takes off. They might need injection to do some long-term research if it's a pharma, and that's not going to pay off for some time. Everyone's got a different funding requirement. It just seems you guys are forcing people into a formula that doesn't necessarily apply for everyone. Where's the freedom and the entrepreneurship actually in your business?
Can I answer that?
Yeah.
That's only because the way we've done it, lots of people said, no, don't do it that way. You won't be able to do it. When we went to American investors, they said, we'll give you convertible equity. You can't have equity. People said, don't use crowdfunding. So I don't think there is a standard way. So I think there's lots of creativity in it. So please don't believe there's any wrong way.
Yeah, the other point, and I wanted to bring Kaitlin in here as well in terms of your views on what you're seeing with fundraising in other markets. But I'll just pick up on that. So that curve that I put up there is kind of the standard one of someone starts a business and then they invest a lot of money, so they're in the red, and then they start selling some products and then they cross the line and they reach break even and then they grow. And sometimes you need an outside investment to fund that growth. The challenge is there aren't that many investors in the UK who will take a chance on a company that's about to reach that break even but hasn't gotten there yet and needs to pour more money in to get some money out. So that's where there are other investors who might look at that. I mean, VCs will look into that, but there are other ways to do that. There is a funding gap in the UK, which we didn't talk about. But, so I think there is kind of an understood path in terms of the need and at which stages you're going to need funding. And yes, the Series A, there's 5 million, and Series B, 10. There are kind of conventions. But I think it is, as I say, it's kind of a horses for courses thing. But you recognize that you are fundraising in an environment where a lot of the funders have that expectation. So I'll just be curious to turn it over to Kaitlin and Ian about other markets.
Yeah, so my experience working with VCs and PE funds in China is that, number one, they're very fast. You can have a meeting with someone on a Friday, and on Monday that the money will be there. The paperwork will be on your desk. It's super fast because it's just highly, highly competitive, and there are a lot of VC firms, and I think, like Niall said, there's so many creativity that you can do in your fundraising, and looking at a different market, and especially with China, there's just so many different types of funding, so many different types of investors who are willing to negotiate with you, to work with you to help develop it. And also, not only do they want to work with you, they also want to use their resources to help your company succeed, because ultimately they want to see that. So what I've seen is, everything is negotiable in China, so if you do it right, you can get it done.
Okay, and we'll pass it over to Ian for maybe a final word on that in terms of what are you seeing in the other markets where you're doing fundraising in terms of the appetite and trends or things like that, practices that are different from the UK?
Well, we don't only fundraise in the China market. We're actually working with companies here. And something I mentioned in my presentation, it's the hedge funds who are now very interested in the projects. And my message to projects would be these days, if you haven't had a hedge fund come knocking on your door, your project's not very good, I would say, because they're the ones who are they're cherry picking the best projects and taking them away from what used to be last year's Wild West of putting up an ICO being able to raise $50 million. So things are changing, and as I also mentioned, I would welcome some regulation in this area, because that would really help legitimise the asset class and to bring in many more people with some confidence that they're not going to lose their shirt.
Ian, any tip on how to get on the radar screen of those hedge funds if you're a startup? How to get noticed by the hedge funds?
It's traditionally you have to have a really good marketing campaign, but the project itself has to be fundamentally good. Your tokenomics have to be good. Tokenomics is of the billion tokens you're going to issue, how many are going to go to the public, how many are going to go to private investors, how many go to the team, how much is in reserve. Many different factors on that. There are many different models that has to gel with what the market is expecting in terms of a good model. You're not going to spend it on fast jets and on holidays. You're actually going to build a team as well. So the tokenomics is vital. I would say that getting someone in the branding and marketing there, because the thing's got to look good. You're not going to get in the door or get any traction, any notice if you've got an ugly looking brand and an ugly looking marketing collateral. So you have to invest in that, and to get in front of the hedge funds themselves, that's a lot of networking. There are plenty of events that you can go to, and eventually someone will hear about it, and the whisper will get to the people who will come along and give you an offer.
Great. Any other questions from the audience? I know we're going to wrap up in some. Gentleman there.
One more question, and then yes.
Thank you, talk. Question is, we talk about crowdfunding. So crowdfunding, do you think is usually for B2C rather than B2B? Do you see any successful example of crowdfunding from B2B? When I say B2B, maybe small, medium, enterprise, and startup.
My view is that it's predominantly B2C. But that's only my view.
Yeah, so our company, we have worked on a Kickstarter campaign before for brands. These are basically to test the market, see if the market really wants this product and service. I think Seeders is a different very much different than Kickstarter. And there's also Indiegogo, which also does social enterprise. So there are different ways of doing crowdfunding. But I think one of the main things you want to think about crowdfunding is the stats that we've seen, maybe 30% of the money that you want to raise, 30% that you probably need to be spending on your marketing and your branding, because you need to create that buzz. And also the first day and then the first day or two is super important. You want to get at least 30% that funded when you start working on it.